So you're here because you're trying to make a big decision. Do we sell mom's house now or wait and see what happens with the real estate market? Maybe she's just had a fall. Maybe dad's moved to assisted living. Maybe you're staring at a 1970s kitchen and a pile of paperwork, wondering if this really is a good time to sell or not. So I'm going to show you why the national housing market is finally starting to turn a corner and what that actually means for you and your home sale. I'm Realtor Emily Cressy with HomeProAssociates.com, and I help families in the greater Seattle area navigate downsizing, estate sales, and big housing transitions with clarity and confidence. And here's what we're going to cover today. Is the market really is frozen, as the headlines say? What is happening with mortgage rates and affordability? And why more homeowners are finally deciding to sell. Stick around to the end, because at the end I'm going to share one mistake I see a lot of adult children make with their parents' houses that quietly can cost them tens of thousands of dollars. So first, is the market still frozen? We're hearing news that the housing market is frozen. And a recent study found that only about 28 of 1,000 homes changed hands in 2025 so far, making it the slowest turnover year in about 30 years. And that doesn't mean that nobody is selling. It means, compared to how many households we have now, fewer people have moved than we'd normally expect. So we're asking, why is that happening? And there are three big reasons. So first, affordability has been tough. Prices climbed a lot in the last few years during COVID, and then mortgage rates jumped to be significantly higher. So for many buyers, the monthly payment just has felt out of reach. Sellers didn't want to give up their low rates on their homes either, right? We've all refinanced and got 3% mortgages. Roughly 7 out of 10 homeowners have a mortgage rate that's below 5%. So when you're sitting on a payment like that, it's hard to talk yourself into trading up into a higher rate, which is what's going to happen if you move, unless you're a cash buyer. Next, we have a lot of economic uncertainty. We had the big election cycle last year. We had all the talk about tariffs, government shutdowns, job worries, the AI bubble in the stock market. It makes people sort of freeze like a deer in the headlights and say, let's just stay here and see what happens. They don't know what's going to happen, and so they don't want to make a change that could put them into more vulnerable situations. When people are scared, they become risk averse. But here's the key perspective shift. Even in a slower market nationally, over 11,000 homes still sell every day. So if you're trying to make a decision about your mom's house, it's not about whether homes can sell. It's about understanding the rules of the game in the current market, so you don't accidentally leave a lot of money on the table. Point number 2, mortgage rates and affordability. The improvement in mortgage spreads. That's the gap between the 10-year treasury rate and the 30-year mortgage rate. So you don't have to worry about what that means, but the point is that spread has come down from 3% to 2%, and because of that, mortgage rates have been able to drift down from the highs we saw not too long ago. We're getting closer into the low 6% range lately in many cases. And according to industry data, home affordability hit its best point in more than 2.5 years this fall. And that's thanks to easing rates and a slight pullback or moderation in prices. The median monthly payment is down over $300 a month compared to where it was this spring. Affordability is still a massive challenge, especially for the younger generation and for higher priced markets like Seattle, where I am located. But for families like yours, it matters that rates are lower than they were. It matters that prices aren't running away like they did in 2021, and wages have actually been rising faster than they did over the last decade. So let's talk about the rate lock effect and how that's finally easing. You've probably heard people say, I want to move, but I don't want to give up my 3% mortgage. And that's what we call the rate lock effect. And for a while, it really did freeze the market. 2023, 2024, people just stayed put. But we're starting to see that change. Recent data on mortgages shows the share of loans with ultra low rates below 3% is holding steady. The share of loans with rates above 6% has climbed to its highest level in about a decade. And what does that mean? It means that more people have bought homes in this higher interest rate environment already, and more existing owners are choosing to move, even if it means giving up a low rate. As one report put it, life doesn't stand still. People get new jobs, people need to downsize, people need more care. And those life changes are starting to outweigh the psychological pull of clinging to a rock bottom mortgage rate. So if you are managing a parent's home, that's actually good news. You're not the only one making a move right now, which means there are more buyers and even move up buyers than there have been over the past couple of years. And they're not just out there window shopping. So if you're listening to all this and you're thinking, okay, Emily, but what does this mean for my situation, my parents, all of our particular details, I put together a free PDF called 7 Signs It's Time to Downsize that walks you through the exact questions that I ask my own clients in this season of life. You can download it at the link below in the description. And if you'd like, you can book a call to speak with me about your family's next steps. So let's talk about what you would actually see if you put your parents' house on the market right now. Nationally, active inventory has been about 1 million homes for several months in a row right now. And that's a level that we haven't consistently seen since before 2020. So we're approaching the more normal inventory ranges that we had in 2017 to 2019. In Seattle, that means about 30% more inventory than we had seen in previous years. Recently, median days on market is back in that pre-COVID range as well. 2 months nationally instead of sold in 48 hours with 20 offers. And here in Seattle, 2 to 3 weeks is more common. So in plain English, buyers have finally got a little negotiating power again. They have some time, they can make some choices, they can look around without panic. Sellers don't have quite the same name your price power that they had in 2021. And we're also seeing price reductions come back into the market. In recent months, roughly 1 in 5 homes had a price cut before it sold. What does that mean for a typical older home? A dated home means you need a strategy, not just a sign in the yard. So here's how I usually frame it for families. Price for reality, not for nostalgia. The house might be priceless in your memories, but the market will compare it to everything else that's for sale this week. And you need to be competitive where it counts. It needs to be clean, safe, get the handyman in there, right? Fix the things. Functionality goes a long way, especially if the home has not been updated in a while. Expect a more normal timeline. If it takes 30 to 60 days to find the right buyer, that doesn't mean you failed. It means that we're in a real market again, not a feeding frenzy. So I recently worked with a family that had put a lot of money into the upstairs of the home, but the downstairs of the home felt quite dated, and they were terrified that it would sit forever on the market. But we focused on the basics: fresh paint, landscaping, removing the heavy furniture, bringing in staging furniture. I suggested a price that was in line with where the market was now, not where it was at the peak. We didn't get 15 offers in one weekend. We had 16 people through the property, and it ended up selling for a little bit more than the price I recommended. So now the big question is, should we wait for prices to come down? Most major forecasters right now are calling for modeling price appreciation going up over the next couple of years. And on average, they're thinking something under 2% nationally in 2026 with some local variation. Nothing like the double-digit spikes that we saw a few years back, but also not a big crash. So when you zoom out over the next 5 years, one national survey of experts projected that the median priced home could gain roughly $60,000 in value between now and 2030. Again, that's an average. Your local results will vary, but here's the takeaway for the decision. If you need to sell because of health, finances, logistics, you're not missing the boat in some kind of way by going ahead and selling now. If you're thinking, we'll just wait until prices change. The data does not support that that is a likely scenario. Waiting may not actually make you as much money as you want. And as a buyer, we're not expecting a crash. So don't wait for that either. Sitting on a vacant home can cost time, stress, carrying costs, risks. Your insurance is higher, pipes can freeze, and it's sometimes just not worth it. Sometimes the best thing to do is get things taken care of and move forward with your life. If you'd like to talk through the pros and cons of selling now versus selling later for your specific situation, download my report, 7 Signs It's Time to Downsize, and then reach out to me to schedule a quick Zoom strategy session. We'll walk through your options, your timeline, and what a realistic sale might look like without pressure. And now that you understand where the market is headed, the next thing you need to know is how to avoid the biggest mistakes families make when selling an older parent's home. Click on this next video and I'll show you the 7 huge mistakes people make when selling an older property.